Right. Good morning. Thanks for joining us today. My name is Ellen Lenardi, and I'm joined here by my colleague Runa. Runa, say hi. We're going to talk about money in and how the various opportunity to fund your accounts is an important process of your journey as you're introducing your product. Clearly, the account funding process is often kind of the make and break moments for your customer journey. But a lot of times, I think we're in the fury of a lot of different integration and effort to launch a product that we don't focus on it. So today, what we're going to do is a couple things. We're going to explore how looking at this particular critical point is going to give you a competitive advantage on how getting more funding, more engagement on the platform directly. And we're going to cover four key areas. So first, we're going to talk about why the funding process itself is critical and what it is that we're looking to accomplish during that process. The second thing, we're going to cover a little bit on the various options of funding and how to think about them. The third is how users think about the various portions of fundings and what their priorities are. And finally, we'll share a little bit of practical strategies. So before I get started, a couple logistical stuff. There's a Q&A. If you have any question, go ahead and post it there. We'll try to get to as many questions as possible at the end. And if we don't get to your question, feel free to reach out to us. We'll chat more on this later as well. But let's get started. All right. So let's first start with the fundamental question, right? Like, why is funding actually such an important process, and why does it matter so much? So, we technically think about and we engage a lot with our fintech when they talk about the initial funding options, what can be there. We think of it as a technical integration steps. But how we should really think about it is to see it as your first moment where your end user become truly active on your platform, right? So if there's no money on the account, if they have not actually provide a mechanism to utilize those accounts, even though you've optimized the KYC process and everything else, those accounts are actually still not there, right? So this activation process, the first step, the activation process, is actually not complete until the funds actually hits the account. And we see this on where teams tend to prioritize their journey. There's a lot of focus on the KYC funnel, but I don't see us getting as many questions on funding option itself. And during the funding process, once you fund them, there's a psychological tip that happens for your user, right? I'm in, I'm actually done. So kind of creating that process and completing it and seeing it as the end of your activation process is incredibly important. The second area, kind of obvious, but it enables usage. Clearly, if the funds is not yet in the account, that actual behavior that many of us are using to create the embedded banking product where users start spending on the card, they pay their bills, right? They are utilizing for some kind of purchase, it can't start. So without funding option, all the behavior that you want to drive can't actually get going. So it kind of shapes that initial journey for the user itself. The third aspect, which maybe are not considered as often, is that it is really important as you build embedded banking finance product that you start developing the financial identity and understanding of your user, right? Where their money coming from, what's their usage behavior, how often are they using it, where are they using it? And so all of this actually are signals that help you establish who your user is, whether it's for fraud vector, understanding bad actors, as well as the opportunity to create upsell, cross-sell, risk scores, all the things that are really important as you're doing embedded finance. So the funding process kind of kicks off that financial identity relationship source of fund that is really important for you. Think of it as almost your data moment has started with them. And finally, it generates revenue, right? So we are all in this business. Without the funds, there's no interchange, there's no float, there's no transaction volumes, no activity. So whether you're a usage base, trying to gain more stickiness or engagement, building SaaS on top of this, right? Nothing actually starts until the money moves in. So we're going to dig deeper into the funding option, but it's just not a functional requirement. We're going to talk about some of the product experience and other as well. But I really encourage everyone to think of this as a product moment, an experience moment where your product becomes a real value add to your customer himself. All right. So with that, Runa, you want to walk the audience through kind of like what the various options are, the consideration, and how to think about this?
Yeah, thanks, Ellen. So yeah, I mean, obviously there's a lot of funding options available, each with their own characteristics and flavors. But it really comes down to three main considerations when you compare these different funding options. So first, you have your electronic transfers. This is your ACH, your wires, and real-time payments and FedNow. These are all low-risk methods, but they vary when it comes to speed and cost. So ACH is slower, but it's typically free, whereas wires are faster, but they come at a price. And then you have, you know, the more recent ones like the real-time payments and FedNow that are instant methods, and these are also relatively low cost. Then we have the cards. So funding your account using a debit or a credit card. So we have AFTs, which is account funding transfer, also called pull from card. We also have OCT, which is where you're pushing funds from an account to a card. In this case, a card at the, your card on the Synctera platform. These are all instant methods. So money is instantly available for the user. However, they are relatively expensive, or come with a fee. Especially AFTs from a credit card, which are their most expensive ones, and also the one with the highest risk.
And Runa, quick maybe points to maybe share with the team here as well. So like if you're thinking about AFT, debit, and credit card, like why credit as an option to sort of consider if it's more expensive and higher risk?
Well, I would say you mentioned the word option. So just having that option, not everybody has a debit card, but so they may have a credit card. That's one. And it is more expensive. So that's something to be aware of for sure.
Yes. I guess it's allowing kind of the
it's
leverage from a consumer side to actually be able to fund the account as well by using credit.
Yeah, exactly. So the more options you have, generally the better, even though it comes at a cost. Then we have cash. Cash is still important for both consumers and businesses, and it's a low risk option that offers immediate availability. Again, that has a fee. Even checks are still important. Despite the digital shift, there's a lot of businesses, especially that are still using checks, particularly in the B2B space. And then we obviously have the third party category, third party and platform. This is your P2P apps such as Zelle, Venmo, Cash App, linked external account through, for example, Plaid or Finicity, and then the ability to add a direct deposit, set up a direct deposit or a payroll deposit. So these all come at a low cost, or could even be free. The P2P apps is the fastest option out of these three. And it's mainly because the other two actually typically run on ACH as a mechanism for the transfer. So let's jump to the next slide. So we talked about the options here, but what options should you really provide in your solution? That should really be driven by the type of user that you have. Excuse me. So let's say your user is a consumer that really cares about, fast funding, meaning they're able to deposit money quickly into their accounts and then have instant access to those funds. So this is where you should consider methods like real-time payments, P2P apps, and AFT, either via debit or a credit card. In fact, one of our clients, First Card, they reported, I think it was over 50% increase in deposits after adding AFT as a funding option on their platform. So that's a huge increase in deposits. And they also told us that their customers actually love the ability to have instant access to their funds, so they're able to start, using their cards and so on immediately, even if it comes at a fee. And this is especially compared to methods such as ACH, which usually takes 1 to 3 days to become available to the user. Other attributes that are highly valued by consumer are, of course, convenience and simplicity. So, for example, for the underbanked, for example, cash deposits is a really, convenient option for them to get funds into their account. Low risk, again, a little bit of cost. Payroll, ability to set up direct deposit and payroll deposits is a very convenient method to receive your payroll every month to cover your monthly costs and so on. And the third option we listed here is the account linking through Plaid or Finicity, for example. So this, for example, enables you to to set up recurring auto top-ups, or make sure that you have a scheduled funding just before the end of the month, so you make sure that you're covering your monthly outgoings, your monthly bills.
Yeah. And I think also, and we chat about this internally quite a bit, right? Like when the reason to do Plaid and Finicity or others, like this pre-validation, actually it reduces the overhead both operationally for like mistakes and issues afterwards, as well as it kind of confirms the detail, pre-validates some of the information that we talked about earlier, right? Like you could even do integration, things like supporting like balance check before initiating a debit. We don't see all of our users actually utilizing that, but it's actually a good use case to consider, where you can check that the balance for the transfer is actually there. It sort of eliminates the friction that could happen otherwise, which is quite important as we're thinking about like the user-driven journey itself.
Yeah, exactly. So we mentioned, or I mentioned that some of these options come with a fee, but consumers are, they're willing to pay a fee for speed and convenience, and that's shown by the quote from First Card that I mentioned. So, I mean, there's nothing saying that these attributes on the left side, so speed, convenience, and so on, and these methods are not important for businesses and that they cannot be used by businesses. They're just so much more important for consumers compared to businesses. So let's look at businesses. For businesses, attributes like high value and scalability are extremely important. So high value businesses deal with high value transactions. So that's where methods like wires, you can, make high value transactions, urgent ones if needed. Even with MRDC, you can do high value transactions. Businesses also deal with high volumes of transactions, and that's where methods, these batch-based methods such as ACH, standardized, proven, and so on, they're still number one for businesses. But regardless of the mechanism that's used for funding, there are certain attributes that are essential for all business users, and this is auditability and control. So when I say control is really to keep the risk in check. So control means the ability to schedule transfers or payments, the ability to set limits, the ability to monitor transactions, the ability to approve transactions. So for example, by setting dual controls, also the ability to manage roles, manage permissions, things like that. So this is extremely important to make sure that you're reducing the risk of fraud and so on. On the other hand, we have auditability, also essential for all business users. So this means, auditability, it means for the business to actually be compliant with tax rules, with regulatory requirements, with legal requirements, and so on. So here is where it's extremely important to have like a clean record of every single transaction. You're able to reconcile that transaction. You're able to investigate issues that come up, with that transaction. So, for example, let's say you have an auditor coming in. What's important for them is obviously to be able to see when was the payment made, from which account was the payment made, who authorized the payment, and so on. So, Ellen, anything here, or I will hand over to you to
Um,
talk about the next one.
Yeah, I think the one thing to kind of also mention on consumer especially and what we've seen on the need for instant gratification is the drop-off rate because they're waiting for their fund where the consumer never come back and actually engage is really, really high, right? So not matching the demand and expectation, I think, of each of this user profile could dramatically impact the engagement on your platform. The example that I think Runa was sharing earlier on the increased usage because of the instant funding, it's I think the reverse of it is the drop-off rate that you see because of the lack of instant funding, right? So as you're thinking about this, I think those are important things to consider. And yeah, I think maybe we jump on to the next slide. And, we spoke about this a little bit on the auditability and important for controls and everything else as well, right? But the funding option beyond on the UX, the speed, right? Every method actually comes with its own operational and compliance trade-off. And this is probably the area that I think become a little bit of a gotcha if it's a first time funding method that team's implementing, right? Um, Maybe you didn't realize the amount of operational overhead that's required, but three key things to consider or ask yourself as you're beginning to consider the various options that you want to implement on your platform. First is on liquidity and reserve itself. So there are certain methods, right? If you're doing OCT, if you're doing cash in, um, for example, so retail cash in has a delay between the time it's actually deposited by your customer and the retail side and when it actually showed up in the bank, it settles and things like that. However, from your consumer's perspective, I put my money in, right? Like, where's my $100 expected to show up immediately? Those are situations that normally would drive to require like pre-funding so that you can simulate that real-time money movement that your customer expect, right? That means that you will have a certain amount of your capital being locked up for this transaction. That means you have to really monitor the funding flows. You have to buffer the account. You have to forecast your liquidity needs based on the usage of the functionality. So, things to consider for some of those options that we haven't covered yet is the liquidity reserve need for some of those areas. Second piece is the operational overhead, right? While the money in tends to be a little bit more seamless, we do see processes that banks and your sponsor banks are going to potentially ask you to engage on because of this, right? So different flow can have different support costs. For example, remote check deposit, right? Or wires, like they could come with a higher expectation for manual reviews, customer support tickets, right? Like, but the manual reviews on Wire, just because of the high volume and especially if you've seen fraud on it, will create an operational overhead on your side where you'll have to figure out how to manage the ticket backlog. How do you do SLA management? Nobody likes it when you have a question about checks and you have to like wait for a while before you get responses. And then finally is the security and fraud implication. Seems like a smaller deal when the money's coming in than when the money's going out, but it is a consideration. We want to start from day one. We'll probably cover this again in future webinar when we start talking about like spend options. But security and fraud implication means that you need to think about the various fraud factor, right? Was it a stolen credential? Like, is it duplicate deposit? Did someone spoof an identity, deposit, take the money out, or what's happening? And beyond I think beyond preventing fraud, it's actually also really important that your bank partner actually understand that you have effective controls in place, right? This is an area when you start talking about money movement that you're demonstrating your thoughtfulness, fluency when it comes to um, controls and being a trusted partner to them. So the trust and relationship that you have with your bank allows them to engage with you more freely. It avoids situation of like delay of onboarding of new feature, right? Like pauses, revisit of processes and things like that. So as much as you can build in early consideration of security and fraud and proactively communicate how each of those funding method has been thought through thoughtfully, especially on these three areas, it really helps you develop like a deeper trust with your bank partner, right? So none of this are consideration that should prevent you from sort of adopting a particular method, but it is a reason that you should approach each of this method like really, really deliberately. So we're gonna transition super, super quickly to the last things around best practices, and then we'll try to get to Q&A. So Runa.
Yep. So, I mean, at Synctera, we work with a lot of fintechs and neobanks, and we've obviously seen a lot of different flavors of the user experience when it comes to the funding process. And based on what we've seen, yeah, here's some of the best practices or recommendations from us. So first, initial funding. Initial funding is obviously a major milestone because this is the first moment of financial activation for your product. The earlier you get to the initial funding, the more likely it is that your user will return and keep engaging with your product. So the first obvious step is to add funding as a step in the onboarding process. You already have the user's attention at this point, so make sure you basically make the most of that. The second point, always have a backup funding option. This is super important. You have, for example, a consumer that's gone through most of your onboarding process, KYC, they have an account, they have a card, they've added their card to the mobile wallet, they're ready to fund and then start using the card. But for some reason, they keep failing. Let's say you have account linking as your funding method, and it keeps failing. So make sure that you have a backup, an alternative path for the user here. For example, AFT. Otherwise, again, you risk losing that user and risk them, not returning. I would say in general, the more funding options you offer, the better. However, that is only true if your steps are easy, clear, your language is clear, your messaging is clear, and you offer real-time feedback to the user in terms of where they are in the process, what's the progress, when are my funds going to be available, and so on. So make sure it's crystal clear to the user what to expect and what the next steps are at any point in time. On the other hand, we have recurring funding, and this is what basically it guarantees the ongoing flow into your account. So this is what drives your your sustained usage and engagement and helps your product grow. So here it's very important to enable features such as the ability for the user to have direct deposits and payroll deposits. Also, the ability to automate top-ups. So schedule automated top-ups, for example, based on my balance has gone under $100. Make sure you automatically pull funds from an external accounts when that happens, or at a certain date before the end of the month, before you're about to pay your bills. Offer some incentives to your users for these auto top-ups. That always helps. Also, another point with recurring funding is that it basically increases stickiness because it kind of creates this default financial behavior. So it's very easy to predict, it's easier to analyze the user behavior. And from there, you can basically you can use that data to create a tailored experience, tailored offering and experience. This could be as easy as you see that a user typically deposits $1,000 by the 15th of each month. So just send personalized messages, emails to that user to, hey, usually you deposit $1,000 by this time. You want to go ahead and deposit $1,000, and with link to funding methods and so on. And then we have the rewards and benefits. Here, make sure that your users are aware of the reward and benefits. Make sure that they understand what the usage unlocks for them. And this could be, you include the information in a welcome package. For the users with low usage, you can make sure that they are you're sending emails regularly to entice them basically and start funding and start using the account.
And Runa, there's actually a question that just came in that I think is very relevant to what you were talking about. What sort of rewards for account funding have we seen like work best, right? Like maybe while we're at that topic, some example of like reward programs for funding that you've seen be pretty successful on the platform.
Um, I would say just simple rewards like cashback or reward points. For example, for every $100 you deposit, you get $10 back. Or like I say, yeah, reward points. Any
Yeah.
other
Yeah.
um,
And
sorry, go ahead.
maybe like tying the most popular one has been tying rewards to setting up recurring funding, right? A little bit of the Foreman grill, set it and forget it type of method, right? Like if you
Yeah,
set this recurring thing, then you do like financial cash reward associated with it. So kind of trying to tie that back to more of the gratification upon setup.
exactly. And also, maybe keep it time limited. Have time limited offers where you create a
Mm,
little bit of urgency. So
yeah.
yeah, but I would say simple and easy is the most successful.
All right. Thank you. And I think with that, like one other question that just came up on AFT, and this is interesting too. I think the AFT with credit and debit. What is more popular? How should I think about it? Why and what's the difference between the two
So we touched
for
on this a little
AFT?
bit earlier.
Yeah.
Um, I mean, debit is typically the more common one, so more popular, mainly because it's lower risk. It's more widely accepted. So yeah, debit because it's less expensive, it's less risk. Um, but again, credit is another option, but it just makes sure that your consumers are aware of the expense and also the fact that they may not be as widely accepted. So the user experience is not as good as for debit. They might get rejected and so on.
And then I think we have time for one last question. How do we think the rollout of the Fed now will impact account funding in the future?
Um, that's a good question, but I think it's mainly just that that more users will actually move to real-time funding, and that comes with it kind of cascades. It means faster access to funds, improved user experience, reduced drop-off,
Yeah.
faster
Yeah.
usage, so on, and it drives the revenue more quickly. So
Yeah, and I think the other part of it with a lot of like different mechanism like FedNow and everything else as it becomes more mainstream is user expectation shift, right? So the expectation of instantaneous, right? The willingness to wait for my ACH to clear over X period of time. A lot of funding method changes simply impact user expectation behavior, which allow your product to either be competitive or not competitive if you don't support it, right? So I think that's kind of the one of the biggest area to consider as we're thinking about the evolution of the market, different new method popping up. I don't know, maybe next time we talk, we're going to talk about how do you fund it with a stable coin, right? Like how important is some of like the crypto movement and being an options that need to be considered in the future. But I think staying on top of that and understanding how market and user expectation are shifting is critical to considering the options you should introduce in your platform itself. So I know your time is valuable. I know, thank you for spending the time with us. I hope this has been helpful. I do want to leave you all with like a question as we're wrapping this up, which is, as you're looking at your own product and you're thinking about it, and you can automate like one thing in your money flow this quarter, right? Like what is it and why? So, wanted to leave you with that thought to sort of kind of reflect back on some of the things that you've learned and heard about today. Whether you're looking to like improve your UX, grow your program, looking to ask us for additional information. Um, feel free to reach out to us after the session. We're very glad you're able to join us today. Hopefully, it sparks some ideas. Looking forward to help you scale your business, and thanks for joining us. Bye.
Thank you.